I would like to take this opportunity to talk about our recently announced Bitcoin futures, which are set to launch in December pending all relevant regulatory reviews. As the Bitcoin market continues to evolve, we are excited to become part of the ecosystem with a listing of Bitcoin futures. That being said, there are undoubtedly issues that we must collectively work through as we develop a derivatives market for Bitcoin. We believe that listing a Bitcoin futures contract on a regulated exchange will provide investors and market participants with the transparency and price discovery needed to pursue risk transfer opportunities that do not exist in the Bitcoin spot market today. So, let's talk a bit about why we are launching this futures product, what makes our offering unique, and some of the risk mitigation controls we have in place for what will be a truly evolving and dynamic marketplace. We know that our clients and the market are increasingly interested in digital assets. We also know that investors see many benefits in trading on a regulated exchange. To that end, we have been observing cryptocurrencies and specifically the Bitcoin market for some time, but we wanted to see if we could provide the risk management tools that would add value to the ecosystem and instill greater confidence in those clients who want to participate in the Bitcoin market but wish to do so with the benefits of a futures contract. So, let's talk a bit about what those benefits of futures are. Futures were created to help businesses and market participants around the world navigate risk and manage uncertainty. Futures allow for transparent and efficient price discovery. Every day a futures contract is traded and settled, and those prices are available in real time around the world. Futures allow for risk management. Futures provide the vehicle for traders to hedge existing risks or to gain access and exposure to major asset classes. Futures also provide a regulated environment that many Bitcoin spot exchanges cannot offer today. Futures markets are well regulated, and all futures trades are backed by a clearinghouse. The clearinghouse is the buyer to every seller and the seller to every buyer of a futures contract. This construct helps market participants to significantly mitigate counterparty credit risk. Furthermore, in our clearinghouse, every futures contract is marked to market twice daily, and variation margin is required to be posted against those marks, ensuring that gains and losses do not accumulate in the system. These benefits are the strengths of our offering, as is the fact that our Bitcoin future will be cash settled in US dollars against the Bitcoin reference rate. The futures contracts will function and settle the same way as other index futures contracts. There is an underlying index or reference rate, and we settle in US dollars against the observation price of the underlying index or reference rate at expiration. Now let me tell you a bit more about the Bitcoin reference rate BRR and why I believe it sets us apart. We launched the BRR and the real-time Bitcoin index a little over a year ago, and we did so to provide price transparency in the Bitcoin spot market. Since its launch, the BRR has created an aggregated view of the trade flow from major Bitcoin spot exchanges. From that view of actual transaction prices during the daily calculation window, the BRR provides the US dollar price of Bitcoin at an established reference time. The BRR is designed around the IOSCO principles for financial benchmarks and the constituent exchanges that currently contribute pricing data for calculating the BRR are various leading industry platforms. The governance of the BRR is vital to its credibility. The BRR is built from executed transaction data, where the single daily reference rate is calculated from Bitcoin transactions on the constituent exchanges that occur within a specific time window. This window is then partitioned into equally weighted intervals, in each of which a volume-weighted median price is calculated from the submitted transactions, and then a simple average is taken across the samples in that window. This reference rate determination procedure is carried out every day, 365 days a year. In addition to the calculation methodology itself, rigorous checks are performed on the inbound data in accordance with the BRR methodology. Let me give you an example of one of those checks. The volume-weighted median contributed to the BRR by one exchange must be within a pre-established deviation tolerance of the other constituent exchanges contributing to the BRR. Failure to meet that deviation tolerance results in the entire constituent exchange data set being discarded for that day. When looking at the features of the BRR methodology, such as the equally weighted intervals, the use of volume-weighted medians, plus this deviation tolerance, All of this contributes to limiting the impact of outlier or aberrant transaction prices in the spot market from influencing the reference rate. The integrity of the index is what we find compelling about the BRR, and these features collectively increase its resistance to manipulation. Therefore, we believe that the soundness of the underlying Bitcoin reference rate methodology, plus the inherent benefits that indexing spot transactions across several platforms provide, is what distinguishes our Bitcoin future from other products. In addition to the product and index-specific characteristics, I would like to talk briefly about some of the controls we have in place for this new market. As I said earlier, we know there are some issues to work through as the Bitcoin market develops for derivatives, and we are deploying a variety of risk management tools to address those issues, such as higher margin levels, position and price limits, as well as credit controls, all designed to appropriately manage the risk of listing and clearing Bitcoin futures. But I want to expand on one of those tools: price limits, or as they are commonly called, circuit breakers. As with any futures product based on spot markets, we have tailored market protections in place to curb excessive price movements. In this case, if the price of a Bitcoin futures contract moves up or down by certain percentages, price limits will kick in to pause the market, allowing liquidity to replenish, and then trading will begin again. If the price then moves up or down to a wider price limit in a trading session, a hard price limit is reached. This means that Bitcoin futures will still trade, but only at or inside the limit up/limit down price. Let's also touch briefly on customer exposures. If we see exposure in Bitcoin futures from any client reach a level that concerns us, the clearinghouse retains the right to impose extra exposure limits, additional capital requirements, or other targeted risk management controls. This is not just for Bitcoin, but is true for any exposure that becomes a concern in any product or market. Furthermore, we have the ability to adjust margin levels and capital levels within the trading session, and these are just our tools. Our clearing members can also collect additional margin or impose additional trading or exposure limits on their clients as well. We take our risk management role very seriously. So, as we embark on this exciting journey of creating a derivatives marketplace for Bitcoin, I wanted to make sure to spend a few minutes today to explain what those protections are in more detail. However, looking at the broader landscape, it is clear that the introduction of regulated futures is not an endpoint, but a fundamental starting point. This launch represents a paradigm shift. It is no longer a question of if institutions will enter the market, but how, providing a familiar tool for Bitcoin exposure, which mitigates the risks of holding the asset directly and offers a transparent price discovery mechanism, is crucial. The real future challenge, as seen in the evolution of the industry, will be interoperability, making these regulated products communicate with the rapidly growing world of decentralized finance DeFi and institutional private blockchains. This bridge between the old and new financial worlds is essential for the next phase of mass adoption. I hope that I have given you information today on the controls we have in place in our market, the strength of our Bitcoin reference rate, and the reasons why we are now launching a futures contract in this space. I appreciate your time today. We look forward to working with all of you and all market participants to launch Bitcoin futures. Our goal is to provide a vehicle that facilitates access and better risk management for the Bitcoin market going forward. Thank you.